Good morning. This is Bloomberg Queen's Stocks to Watch at 8:30. This is where we take you through a handful of stocks that are in the news right now, take experts' views, and we also take our experts' idea for the day. Well, today we have with us Avinash Korakshakar, Director of Research at Profit Smart Securities. And the stocks that we will be talking about is Voltas, Amber Enterprises, and Dr. Reddy's. Avinash, good morning and thanks for joining in. Let me begin by talking about Voltas. Essentially, what we've done, what we've seen is a muted quarter. But the positive here, of course, is also the fact that the earnings are ahead of expectation. The company, however, says that the peak summer season has been lost for the industry and discretionary demand may be withheld for a little time longer, considering there is a lack of liquidity. And of course, there will be temporary effects which will play out as far as FY21 is concerned. Avinash, let me get you in the conversation. Your view on Voltas, how things have panned out, and how you see this one.
Yeah, good morning, Agam. My sense is, Agam, the numbers which came out for quarter four for Voltas was slightly better than what the street anticipated. And I think AC sales, at least the number on the face of it, has appeared to be pretty strong. The management commentary obviously appeared a little cautious, and I think it is quite obvious that discretionary demand in the next 2 to 3 months could possibly be under a little pressure. And as the management rightly pointed out, that the peak summer season, most of the revenue has got lost. So I think incrementally, FY21 is going to be a slightly flattish to a tough year. Whatever growth we could see is going to come in only in FY22. So I would believe that yes, the stock may correct slightly, but at lower levels, I would believe there could be some value buying because Voltas is a large player not only in the AC window market, but they have a large presence in the project market. The project market would obviously take a longer time to recover, but yes, net numbers which came out were pretty good. Management commentary continues to be cautious, so we prefer a hold. Fresh buying possibly, maybe at lower levels could be advisable.
Okay, fair enough. From there, we move on to Amber Enterprises. And this is actually about the trend because we are looking at double-digit growth for Amber Enterprises at 10%. Its margins may have contracted to 7.5 against 9.5 roughly. And profitability is also declined 5%. But I suppose the top line is positive. The question is that how the current quarter, the ongoing quarter, has gone by, considering there has been a slowdown as far as manufacturing is concerned overall. And we all know about the kind of valuations that Amber Enterprises and its peer Dixon Technologies is trading at. Avinash, your view on Amber, how are you seeing things here?
No, I think, Agam, if you look at the numbers, the quarter four has been definitely much better than what the street anticipated. But I think the first quarter of FY21 is going to be a little challenging, considering the fact that April and month of May has been a month of complete lockdown, and this company actually is a key supplier to players like Voltas, LG, Samsung, which basically outsource their entire AC requirements. So my sense is that one could definitely be a little cautious here. The stock still continues to trade at fair to expensive valuations, but yes, from a longer term perspective, I think the business model is very strong. The company's capital allocation and structuring is also quite good. So probably this stock may not fall significantly. But yes, from a longer term perspective, any decline is always an opportunity to improve this stock. I would believe that maybe the second half of FY21 and FY22 would be a lot better. FY21 could either be flattish or mildly negative.
Okay. And we move on to the final stock in my list. That's Dr. Reddy's. It's got in its establishment inspection report from the US FDA for its Srikakulam plant in Andhra Pradesh. And this, of course, is a positive, which means that the IR indicates that the inspection is closed. Uh, Avinash, I've been seeing Dr. Reddy's in comparison to some of its peers. It's done reasonably well in terms of the pharma sector, not unlike the entire sector, which has been very strong off late over the past few months. What's your view on Dr. Reddy's?
No, I think Agam, this news flow is definitely positive for the stock, and I think looking at the current trend where most of the buying has revolved around defensive sectors, pharma is one pocket where I would believe that one could see a little bit of buying in this quarter even at these levels. Our sense is that this news flow is obviously going to result in some material gains over the next 6 to 12 months. In terms of earnings impact, what is important is how is the company going to do as far as the US market goes. But overall, I would believe that this is a stock where possibly one could park in some funds even at the current level. From a longer term perspective, I think pharma is one sector which should do well, and I think Dr. Reddy definitely is one of those stocks which could possibly outperform with a reasonable margin. So I would prefer that, yes, buying on declines is definitely a good opportunity for a company which is now looking at getting a decent traction, both from the US as well as from the rest of the world markets.
Okay, Avinash, let me conclude the conversation by asking you about an idea that you find interesting or may have value at this point in time.
My sense is, I think, Agam, clearly, we are very positive on the specialty chemical space, and we believe that now with this China, kind of issue, a lot of companies are looking at changing their supply chain. I would believe that, a company called Vinati Organics, which we basically like quite significantly, considering the fact that it's a virtually zero debt business. They have attractive EBITDA margins, and I think they are one of the key players of ATPS, which is a very important ingredient for a host of industries which actually use this input. Looking at the competition and the margin improvement, I would not be surprised that over the next say 12 to 15 months, even from the current levels, 18 to 20% upside is possible. It's a quality stock. It has come down from the peak level. So I think investors should use this opportunity to buy into this quality play, and I think they should be definitely rewarded over the next 12 to 15 months.
Fair enough. We'll be watching out for Vinity Organics as well. But on that note, Avinash, I'd like to thank you for taking the time out and speaking to us on the stocks. And on that note, it's a wrap on the stock watch at 8:30, but there's lots more lined up. Stay tuned to Global.